Hey guys, what's up? It's me, Aaron Dishner from the Better Traders here with Coin Bureau Trading, and joining me today, wait, how does this work? I have to point this way. Is Gabbie Trades. What's up?
Hello,
welcome,
everyone.
welcome.
Hi, thank you so much for having me. How are you?
Yeah, absolutely. I'm doing good. How are you?
Great. I'm doing great. Well, not so great with the markets, but we'll see.
Yeah. No, I totally get you. Before we get started and we dive into charts, it's customary if you guys have chart requests, if you have tickers that you're really interested in, leave a comment in the chat window. I see you guys popping over and dropping in some likes, dropping in some greetings. So it's good to see you all. So make sure you're leaving comments there so that way we can review tickers that you are interested in. We have a couple of ones that we're definitely wanting to share ourselves, but we're also here for you guys too. Okay.
And make sure to like and subscribe.
Exactly. I was going to say, so here we go. We got a little pop up.
I always forget that.
Yeah. Don't forget to like and subscribe to Coin Bureau Trading and Gabbie Trades YouTube channel and also her X handle. So before we get started, why don't you go ahead and just tell us a little bit more about yourself, your experience as a trader. Just give us a little bit of an intro for people that don't know who you are.
Sure. Well, my name is Gabbie Trades, and I've been trading the market since, I don't know, actually, it's probably more than 7-8 years now. So yeah, I have quite a bit of experience in the markets. My background is trading equities and Forex, but of course, when the bull market is around, I'm way more involved in crypto. But my strategy is basically what I've always used to do on equities, and it works quite well with the cryptos. So yeah, I started my YouTube channel not so long ago. So guys, go and support. And yeah, I've been streaming for quite a while now, but I'm still learning. So bear with me if there's anything, but I will try and provide as much value to your community as I can, Aaron.
Awesome. So let's just go right into charts. I don't think there's any reason to like dance around things right now or like, yeah, we can just chit chat because the market is super duper crazy right now. So yeah, why don't you go ahead and you can share your screen with us. You'll want to make sure you're you got clicked on the trading view tab first, then I'll switch it over to you.
Yes. Okay. Yeah. First things first, like I just wanted to say right now, everyone is panicking right now. And honestly, the markets are completely on the edge. And I think there is a very good reason for that, right? And we discussed briefly with you before we started the show, and we kind of like spoke about everything, but let's just say it for the public as well. Now, the US tariffs, of course, especially the ones that we discussed on China, 104% on the imports, have actually really stirred the pot right now. And in my opinion, it's not only about the trade anymore. It really feels like it's a geopolitical chess game. Like that's how it feels. So we were talking about the speculations, and me and you are not sure if it's still the speculations about China retaliating by selling the US treasuries. And that's what's contributing to, that's what's, problematic right now, because that would literally spike the yields. And we're seeing that right now, which of course then will put pressure on the bonds, right? Actually, across the entire board, there is going to be extreme pressure. So this is the reason why we're seeing this dip right now. But I wanted to share with you guys why I think that we're still in a bull market, and what are my projections, and when I feel that we might be actually entering into a bear market. So, okay, let's jump straight into the charts for that. Aaron is going to say if we're visible.
You're good. Yes.
Yeah. Okay, cool. So, okay, before we do that, I had a plan on how I want to present that to you guys so it's easier for you to understand. So basically, when we're trading, right, usually we have a price leg, right? So we'll have a price leg on the charts, and for Aaron and for, experienced traders, that's very easy. We have a high and we have a low, right? So that's in a bullish scenario. Since we're in a bull market, we're going to talk about the bullish scenario. So what I usually do is I like to mark that price leg with this Fibonacci tool that is going to tell me where is the current price in that specific price range or that specific leg. So anything between 0 and 0.236 is going to be my extremely cheap area, right? And of course, you have the equilibrium 0.5, and then you have the premium pricing at 0.786 and 1. Now, okay, so knowing that we're in a bull leg, essentially, what usually tends to happen is there is two scenarios for the bull leg to play out. The first one, if it's a really, really strong bull leg, we're going to see something like this, where price bounces off the 0.786 and it doesn't go too low, and then it goes into price discovery. So that's one scenario. That's in a very, very bullish scenario where there is little to no pullbacks. The second bullish scenario is when the price drops down to the 0.5% and then goes into price discovery from here. That's called a trending market, right? You have three trending market structures. The first one that I showed, the second, which is the trending one, which usually pulls back to the 50% of the price leg. And then you have the third one, which is really not nice. And what we're seeing mostly on altcoins right now is you have the price leg and then you drop down to the 0.236 area. And that is, my friends, no longer a bullish leg anymore. This is an area where we enter into what's called a range. So then you see price bouncing from 0.236 and 0.786, and that's it until price makes up its mind and decides to break structure to the upside or to the downside. So now that I've explained that to you, let's apply it to the charts real quick, so it makes sense to you guys. Let me delete that. I think this little introduction is going to help everyone just understand a little bit better.
Yeah.
Mind you, my screen is really, really zoomed, so I hope you guys can see.
Yeah, it looks good. I'm checking the screen. I'm checking the stream. You guys let us know in the comments too if you can see everything all right and you hear us okay.
All right, great stuff. So, all right, first of all, are we looking at the right one? Let's look at this one. This one is cleaner. And then remove that. Okay, so this is the price leg that we're trading on Bitcoin right now. This is it. This is a bullish price leg, right? Now we've identified the high. We've identified that this is the high right here because we had a break of structure. So we have the high and we have the low down here. Now we're still in a bullish price action, and it might be that we're still even in a very, very bullish price action, because from here we had the drop down here, and that is still a very, very bullish area. So it means that we can still go in price discovery from here. It's absolutely possible. Now, what I want to compare is to the previous all-time high that we had up here that we broke with the when we got above here. So imagine that this didn't happen, and now we're in the same situation right here. We have a high, we have a low, we had that, and as you can see, price was maintaining the 0.786, right? It was maintaining it, and then we had the August drop, the 5th of August drop down here, and that was it. Price quickly bounced back within the range of extremely bullish, sort of price action. So, we're seeing a very, very similar thing. And I also want to show you from the previous high to the low, that was about almost around 33% drop that we had. So if we go back and we look at what's happening right now, we're sitting at 31.5%. And me and Aaron, I know because I see Aaron's analysis, I know that he is eyeing this area very, very carefully for a bounce, and he wants this area to hold. And that's extremely understandable. Now, the thing about this whole thing is that, yes, first of all, if we look in terms of price action, we know that we have imbalance down here. We have fair value gaps on a weekly time frame, even on a monthly. If we go, we have a buy breaker block, some areas that should really, really hold. But comparing it really to the previous price action down here, we might get another drop, right? We might get another drop. Because from this low to the 0.5, I've measured it earlier, but it was around 8.6 something like 8 points. Sorry, not like that. Yeah, exactly like that, actually. So it was about 8 to 9%, which brings us around this area again. So for me, to be honest, you guys, this is not the bottom down here, but also having considered that we have this massive fair value gap here, we know that there is possibility that we might even go and sweep that low down here. But that doesn't mean that we're entering into a bear market. In fact, even if price goes down below the 0.5, it still doesn't mean that we're entering into a bear market. The area that's going to show us that we're now completely screwed is if we start trading below the 49K down here.
Yep.
I personally don't think that this is going to happen, but this is what I see. Now, this is for Bitcoin. I want to quickly show you Ethereum, and we were talking with Aaron before the show. Why is Ethereum so screwed? Right? So we apply the same concepts down here. Okay, we have the leg. This is, by the way, very, very basic price action. We have the price leg up here. And then what happened? What happened? We dropped to the 0.236. This is the moment where I lost all my trust on ETH down here. Because once we reach that area, for me, we're now entering into what? A range. So the thing with that is, okay. So the thing with that is, and if you follow the price action, right, you have the leg, you retrace to the 0.236, which now indicates a range. And then from here, for me, it's only buys. So I was in a buy here, I was in many buys, and I profited quite a bit. But once we reached the 0.786, I started exiting. And then this bottom here actually is where the 5th of August happened. And Ethereum was pretending that it was holding the 0.5, but it's already too late because we saw what happened down here. So we know that even if there was another retest, that's what I knew, even if there was another retest on the 0.786, Ethereum needs to drop down and come back to where it belongs in the range, which is the area of 0.236. So Ethereum has still more downside because right now we're trading here and we're almost there. We're almost there, but not quite, right? We still have from now another 13-14%, right? To drop to the area that is going to tell me, okay, now we're in a zone that I'm interested to buy. Quickly, before, because I'm interested to hear Aaron's thoughts as well, let's look at Sol as well. Sol is quite interesting. Actually, all right, let's do this. Again, before we had the all-time highs on Sol, what do we have? We have this price leg, and the price leg traded to the 0.5. This is very strong, and I've been calling it that it's so strong, that I'm extremely, extremely happy trading Solana because this is very, very strong. So from here, of course, we go into price discovery, and now we created the new high of this price leg, right? We know that now we're trading this high, and that is our price leg. Now, what I don't like to see is that Solana is starting to lose the 0.5 now, right? I don't want to see Solana trade below $79 because if Solana trades below $79, for me, we're not going to see any new all-time highs this cycle. That's the thing. So, this is my overall very, very simple analysis, right? On a shorter time frame, you get to see a lot more, but all in all, basically, this is where we're at. And to be fair, I do believe that Ethereum in this bull run is going to run back to the 0.786. So somewhere around the 4,000 area, 3,800 area, which is a lot of gain, to be honest. Like from that area to up here, it's like 220%. Happy days. And we know that if ETH does that, Bitcoin is going to do at least 110x. So that brings us to around the 150K area. So yeah, this is what I wanted to share with everyone today in terms of, simple price action and where we're at the moment. I
think a lot of it, by the way, thank you for sharing the way that you chart. I don't, use the fibs to that or with that specific strategy. So it's nice to see how other technical analysts view charts, how you look at that to gauge the strength of a bull trend or bull market, where things break, must watch levels, things like that. And as a reminder, if you guys are learning something, I'm learning something new here from Gabbie, leave a comment about what you're learning. Sometimes other people don't learn at the same rate as you. Sometimes people need to see things written down. So write things down, leave a comment in the chat. I see you guys asking lots of questions also. Dropping some funny comments too, but the likes are way down for the amount of views for this video, guys. You got to like the video so we can keep this going. If you like this content, you want to see more of it, like the video, okay?
Yes.
Now, I'm curious, before I give my 2 cents, I actually want to see your fib strategy drawn on the previous Bitcoin bull run back in 2021. Could you do that for us? And then I have a couple of questions and thoughts about what you shared so far. Is that cool?
Yes, absolutely. Let's have a look. Let's do that. I'm pretty sure I've done that before, but let's have a look. So right now here, we're on my charts, right?
Yes.
Okay, cool. Let's go on the monthly for that. It's going to be easier. All right. So which high do you want to draw from? I think from here.
I mean, you pretend like we're 4 years ago, and you go ahead and just walk us through the same concept.
Okay. Let's have a look. If maybe I should do bar replay. That's going to be a bit easier.
I love that song, by the way. It's a good one.
So funny. Okay. All right, cool. So let's pretend we're here, because what the all-time highs then were at 69K, right? So okay. All right, so cool. This would be, let's identify first the bottom, right? It's going to be okay, let's say it's down here. All right. This is pretty much okay. So the way we're looking at this chart is like that. It's the same. It's pretty much the same concept, right? You have the price retracing. You have the price leg. You identify the price leg by break of structure, right? You need to find a break of structure to say, okay, this is a high, right? So you identify the high here. Okay, let's see what happened back then. That's very cool game. I love that. So again, same thing. We drop down. This is very bullish, because what happened? We dropped down to the 0.5. We tested one time, second time, and the third time we went into what's called price discovery, right? So it's pretty much a similar thing, a bit more boring than what we're seeing right now. But to be honest with you, right now, the tool in the current market conditions, it's very, very much helpful. Over there, here, you're really waiting to see a high created, because the price is just going vertical here, and that's on a monthly. Maybe if we go on a weekly, it's going to be a bit more clear. Yeah, no. Okay, so yeah, pretty much the same thing. You identify the high, and then you reject from the 0.5, and you go in price discovery, which price discovery was not that much. It was not like right now, right? We just had this one bounce, and we got up to 69K, and that's it. So it's a bit more boring than what's happening right now.
Okay, that's fine. That's fine.
Yeah.
Cool. Thanks. Yeah. So I think
you're welcome.
The first thing that comes to mind is, for me personally, when I use Fibonacci retracements, I'm using them as forward-facing projections. So I would have to watch more of your content to figure out how you use fibs to project where a possible top would be. Like, for instance, if I were to draw fibs from the 2017 December high to the 2018 December low, it gives you a pretty decent projection of, with the 1.272 extension and the 1.618, where things should end up. And it does a pretty good job of that. But I'll have
I
to
do
look at more
agree
of your
with that.
content.
That's a very traditional way of using the Fib tool, right?
Yeah.
The way I use the Fib tool is more to identify the price range, because you identify a price range, like I said, when you break a structure on a higher time frame, whether it's a bullish or a bearish price leg. For the purpose of crypto, we're using bullish price legs most of the time, but market is fractal, and you can apply the same concept on a lower time frame. When you identify a swing high and a swing low, you can apply the exact same Fibonacci tool to just gauge sort of the price range of this
I
price
see.
leg. Yeah.
So you're looking at that the chop range basically, and see, is it going to break out a chop? That kind of concept.
Yeah, and it should break out. Let's say if it's a bullish leg, it should break out if it holds around the 0.5 and the 0.786. But if it drops further to the 0.236, basically that means now that that's a ranging structure. It's as simple as that. Yeah.
Okay. So as you mentioned in your BTC analysis, yeah, like my must hold level is 73,777 because it's based off of that March 2024 high, which was also tested again in, I think it's October, before we saw the rally, the second leg of the rally take off. So I agree with you as well that we're in a bull market, but personally, if Bitcoin breaks below that level, I'm going to be having to change a lot of my thoughts and feelings about BTC and its potential. I still think that BTC will have a blow off top later this year. But there are also so many current events that are happening literally right now as we even speak, where China had a retaliatory tariff of 84%. So they're basically matching whatever the US tariff rate is. We have Scott Pecent saying China can play as hard as they want. We're not giving in. So it's like we're just seeing mass chaos unfold. We're seeing the 10-year bond curve just going like absolutely parabolic.
Vertical.
Yes, seriously. So I think
don't forget we have also the FOMC meeting coming up
today, right?
No, not today. Is it?
It's
Wait.
not today?
No. We have the FOMC, I think 6th or 7th of May, if I'm not wrong. That's where we're gonna hear the Fed speaking again. Because see, that's also another thing, and I was even talking about this on my channel yesterday. That's how I started my show. I was like, I had this epiphany. What if Trump is doing all this to just like get the Fed to lower rates?
Yeah.
So he can, so
and essentially
he can borrow
China's
cheaper.
kind of doing the same thing too. They're basically tanking the yuan so that they'll have to flip the switch to QE, to quantitative easing, maybe ahead of the United States. I don't know, but it's really difficult to invest right now. But right now for trading, I still think this is an amazing time to trade just because there's so much volatility. But I think a lot of people watching this channel, they often get, I don't want to say that people get lazy because that sounds negative, but I think we get complacent with these levels and we think, well, this is the lowest it could probably go. I think I'm just going to enter here. I'm not going to look back. But they keep checking their phone, they keep checking their portfolio, or they're buying Ethereum like I foolishly did. And I'm like, oh, why did I do that?
If you knew how to use my Fibonacci levels, then you would know where to buy and where to sell.
Yep. I think another part of this too is
ETH is cooked.
Yeah, a lot of people are also, as we all develop and learn as traders, we also learn about contrarian views. And I think a large contrarian, or rather, there's a group contrarian stance about everything that's happening right now, where people in crypto are like flexing their muscles, saying like 20% is nothing, or like stock market falling 5% is nothing because crypto is like, we're used to like 20% dumps in a day, stuff like that. It's like, guys, do you realize how insane you sound? Sounds so stupid. We get almost brainwashed in our little bubble of a market compared to the global markets, where stock traders are happy to nail or to bag like 3 to 5% in a trade. That's a good trade to them. And so many of us are like waiting for like 100x, 200x. We're like, I'm not going to sell until never going to sell diamond hands. Like what's your what's your thoughts on the current conditions in comparing an investment mindset or a trader mindset?
Okay, that's a very good question. I think investors right now are extremely cautious, right? And to be honest, until all this cacophony like sort of goes away, until then the bond market is going to stay volatile, and that's when investors are going to be, they're going to remain cautious, right? It's really a wait and see kind of environment, and that is what brings even more anxiety into the market. uh,
Hmm.
the crypto investors, and I even posted on Twitter, I think, which I agree with you, Twitter has become, I'm just staying away, as I want to be there. I want to post good stuff for my followers, but it's just so hard with all the
Mm.
BS that I'm seeing. But yeah, I think also for crypto investors, they're kind of tired, and they will. I
Yes.
have a feeling that when Bitcoin goes again to around the 100K level, a lot of
Mhm.
people will start looking for an exit. I really think that, because they don't know what they're doing. They're scared.
Mm.
Um, and yeah.
I really strongly agree with you. I never thought about the fact though that people would be selling out or taking profits and just reducing their crypto exposure once Bitcoin gets up to 100K. But I think that makes a lot of sense given that it struggled so much to stay above 100K, went up to
Yeah.
103, 106, then it topped out at 109. So psychologically speaking, $100,000 would make a lot of sense. But on the other thing you said, I also feel like we are asymmetrically set up for a reversal of some sort. I mean, looking at here, I'm gonna let's see. There we go. How do I have to switch my screen like this?
Oops,
No, this one. It's
infinity.
okay. Oh, that's right. I have to remove and then I add. Sorry. Okay, there we go. Um, so Bitcoin right now looks pretty weak, although I think it's going to hold up, but it's literally dancing on the line, right? The thing that I'm looking at the most, though, is we don't even have to look at the whole list, but looking here, just comparing total to others, like there's really, I mean, I know this looks like super bearish, but I keep seeing
Mm-hmm.
these little glimmers of hope where others just keeps wanting to go up higher. I keep looking at this list of like the top 50 market cap. There really shouldn't be this much green right now. This literally makes no sense. Why? I mean, I know it's just the smallest little bit, but knowing what's happening and unfolding before our eyes, and I see this, I'm going, I just think that a lot of people in crypto don't want any more bearish vibes and they're just going to buy anyway. I think they're just going to buy these low cap coins because they just want to ignore the bigger problems that are happening. I feel like
Which
honestly the
which is
crypto
fair
market is going
enough.
to force a bull rally whether the market's ready for it or not, because like last week before all of this really unfolded, I started to see the signs of a reversal coming for a lot of coins. We saw some decent moves, especially with meme coins, and then it just got slapped in the face again, like Will Smith slapping
I
down Chris
have.
Rock. It was frustrating to see, but it also like, wow, like this is amazing.
It
Like
was
we could
fun to
actually
see.
see these low cap alts make a comeback
Yeah.
while the top 10 are struggling to keep up, while Bitcoin is struggling to survive. Like, what do you think
Um.
about that? Oh yeah, I'm seeing a comment.
Uh.
FOMC minutes is today. That's what it was. Thank you very much.
Oh,
Milk
is it? Okay.
meets are
Okay.
on. Sorry, but
Thank
go ahead.
you. So, let me go back again to when we had the last panic mode, which was Bitcoin falling down to 49K. Everyone
Yeah.
remembers that, right?
Hmm.
So if you go on the charts, and you can quickly see, if you compare, right, because we know that there is still correlation between the traditional markets,
Hmm.
whether S&P 500 or Nasdaq, whatever you're looking at, and Bitcoin. So when we had the drop to 49K, that was between July and August,
Yep.
and the traditional markets were dumping in July. The crypto was rallying, and then is when the whole drop happened, when crypto started catching up. So there was a bit of decoupling happening there for a small period of time in July, but
Yep.
it did happen. So this is the sort of thing I'm expecting right now. So if we get any bounce right now, I do not believe that this is going to be it. I strongly believe that it's not going to be it. And on the charts, on a lower
What do you
time
mean
frame, and
it?
that's what it meaning by new all-time high from here. this is what I don't believe that that's going to be the case. I think that there is going to be a lot of struggle. We have to fight levels like 88,000. We have to fight levels like the 95K thousand. We have a lot of liquidity that's sitting over there. So I think that it's very possible that we might get a spike into high levels like that and then bring another flush. All of this is on the table. It's nowhere said that we're just going to go into straight line up from here. And in regards to what you said about people buying altcoins, I can see why that's the case, because I also had alarms on probably, I don't know, 50 pairs, and half of them already rang. So on Sunday. So, you know, it's understandable, but in periods like that, you need to be extremely cautious. And that's why I'm still short Bitcoin. And I was short. The best opportunity for me to enter a short was when Trump was speaking, when Bitcoin was at around 88K. So I shorted at his speech, because what tends to happen with crypto is usually when political figures like that go live, there is a huge wick in price, and usually price sells off. So that was, I think, the best opportunity, and I'm still in that short, just hedging and protecting my capital pretty much. So until then, yeah.
Yeah, I understand your thesis of why it's unlikely for the price of Bitcoin to make an all-time high. However, I'll counter that with the whole theory that some people, including myself, have about the Fed switching from quantitative tightening to quantitative easing, which it feels like Trump is trying to force Jerome Powell to flip the switch. It feels like he's putting a ton of pressure on purpose on the entire global market to force Jerome Powell's hand. I believe if that does happen and they do switch to QE, I think that the markets have a very strong chance of rebounding and defying a lot of expectations. The longer this takes, the less likely I think that Bitcoin will hit my personal target of 173K by November.
Wow.
Yeah. And that was modest too, because I was saying that, I've been saying that actually for 2 years. But I mean, back in December 2024 in January, people were like, it's going to hit 400,000. It's going to hit 500,000. It's like, guys, when that should have been like the biggest sell signal. People talking about XRP hitting $14. It's like, why didn't I take more profits up there? But anyway, I do believe, though, if they flip the switch to QE, it's not going to be like, let's turn the lights on, let's turn it back off again. It's going to be like, okay, we have to keep it on for a while. But what do you think about that scenario if that actually happens? If the US actually switches from QT to QE, do you feel like that changes your thesis at all on what is possible in crypto and Bitcoin?
My thesis change all the time, by the way.
Yeah,
I am not all the time, literally all the time. 2 weeks ago, when I was speaking to my community and I was live on YouTube, I was saying to everyone that I don't want to see the March lows being taken now, and I want to see the March highs being taken, and potentially February highs, and then have another drop. I was very, I believe that thesis a lot, and now I saw that it's just not going to happen, and we just like continue to drop. And I can see that the markets are very weak with all this geopolitical tension. So, they're very responsive to everything. So yeah, QE, if that happens, it's going to definitely potentially get us into a new sort of mindset. But again, I'll be trading very, very carefully all these waters, because capital preservation is number one. And what I know, by the way, I think what I'm sure 100% is that from here we're going to potentially see the last leg up of this bull run. So yeah.
No,
how high is this going to go?
Yeah.
I cannot tell you. The important is that you catch a buy, you take out some of the position at a good profit take, and then leave a runner. That's always the best thing. Yeah. So.
Yeah. Well, let's look at some more charts. I'm seeing some people posting specific tickers, but before we get to that, Make sure that you like the live stream. Make sure you leave a comment. Make sure that you subscribe if you haven't already.
Yes.
I'm going to go ahead and just scroll quickly through. Yeah, really that. I see people, one intelligent person is posting PAXG, which is the crypto version of gold, but I think it makes sense to talk about gold. We'll just take turns on this. Is that cool?
Oh yeah, that's fine. Let's go.
Okay, so we'll do that, and then why don't you prep? There's no way. I don't know why some people are asking for what they're asking.
What are they asking for? Gold?
No, HBAR. Like why?
Oh, HBAR.
I mean, I
Yeah.
understand why, but yeah, maybe that one and XRP you can talk about because they're pretty closely related, I think, in their performance. So gold, I was already planning on talking about anyway.
Oh, nice one. Let's go.
Okay, so the thing with gold, and the simplest explanation I can give is that gold is like the barometer or like the temperature gauge of the market. And when there's increased fear and tension, we're going to see gold start to go up and up and up. When there's fears of war, gold goes up. When there's fear of economic crisis, gold goes up. Now, what was weird to me is back here on Thursday when gold made an all-time high just north of like 3,150. It was weird to have all of this volatility trigger from there and have gold have a pullback of like 6%. That's a lot for gold.
Yeah.
For comparison, like gold, like a normal day for gold, like a good day for gold is like up what, like 0.5% maybe? Like 1% is like, whoa, that's a big move for a day. So like seeing all of this volatility on gold is really telling to me that there's a lot of volatility, obviously. But the fact that it fell so much is amazing. Now, it was just at all-time highs. So even if people are taking profit up here, you're selling at literal all-time highs. Like you can't go wrong taking profit up here. One thing that I can't shake this thought, and it's just my own, like I don't have any inside sources, but knowing gold is at an all-time high, knowing that there's a lot of financial instability right now.
Yeah.
And I personally believe that the United States does have a decision to make about QT to QE. If we switch to QE, then it'll be risk on assets, which means that gold might, I don't think it's going to fall from here at all. If anything, I think gold's going to continue to just kind of chop sideways for quite a while. But I think it would make the most sense if I was a really savvy investor, which I wish I was better at because I don't have any gold. But I would be selling gold up here to invest in oversold stocks, to invest in Bitcoin, to invest in other risk on assets like tech stocks and stuff like that. The other thing that I'm looking at too, aside from these red triangles, which do a fairly good job of predicting where there's going to be a pullback, is just looking at straight up RSI, especially RSI on the weekly time frame is super duper telling. The price has been massively bullish for a long time. I still think it is strong bullish, but seeing a peak here on RSI at 90.80, which is insane for the weekly, and seeing it put in lower highs again and again, while we're seeing higher highs in the price, that's bearish divergence. Because it's the weekly, I don't expect anything to unfold. I don't expect gold to just dump instantly. But this is a telltale sign that there is growing weakness in this bull rally of gold. Now, I don't want to see gold go down, but I'm looking at this and I'm thinking, okay, I'm trying to think like one or two steps ahead. If gold is starting to show signs of topping out, and I do think it's going to continue to chop solidate sideways, probably in like a box range. It might go up a little bit higher too.
Yeah.
But something like this for a while, especially if they're going to have some emergency meeting, especially if we switch to QE or China backs down, then we're all good, I guess, maybe. But I feel like we're nearing the end of the panic and the fear, personally. Like we're getting really, 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 really close. The one other chart I wanted to share is the VIX, which is the volatility index of the S&P 500. This one also is starting to look a little bit scary, and I don't use the word lightly. Mainly because it's had these flash moments where things are bad, right? We get a higher high, and it goes up higher, and then we have like this massive like pump that we saw on August 5th when the Nikkei crashed. And at that time, RSI got up to like some crazy level of like 90, and then the next day it dumped down to 60. There was a pump right here in December 2024. It pumped all the way up, or RSI pumped up to like 92, then fell down. The problem I'm seeing right now is that we're seeing RSI continuing to stay above 90 on the daily, which is a little bit concerning, because the last time that this exact thing happened, it wasn't over here, to go back over here, was during the COVID crash. Because we saw RSI remain overbought above 90, basically for almost the 90, it was 85, but for about 4 days. But we continued to see the VIX go up higher and higher. So this is basically the start back here, February 24th. This is the start before it actually crashed max pain basically like 2 weeks later.
So you're saying that we're seeing something similar right now. Is that what you're saying?
Yeah, I'm saying that we're seeing something similar, and I don't like it. So I'm hoping that things do not increase, that the VIX does not continue to rally higher. But even now, like the fact that it's at 56.6 is insane, especially if you look at this chart on a longer time frame. Like that's pretty significant, the fact that it's up this high. Because it's only at these levels. Sorry, I have all this extra noise up here. It's only at these levels when we have these max pain moments where things are just really, really out of control. And usually it's a quick return. But if this is going to be an extended, quote unquote, trade war, this isn't good, because we could continue showing more volatility, which means more downside price action, which means a possible repeat of March.
Well, there is a saying, right?
Yeah.
The market can stay insolvent until you are, what was the saying? The market stays insolvent until you are, come on, finish my sentence. Till
hungry for a burrito, but you don't have enough money. You have to take out a loan for a burrito. I don't know.
No, my point is, basically the point that I'm trying to make is that the market can stay irrational for a very, very long time. And, the VIX is high. Yes, that's true. The VIX has been even higher than what it is right now during the financial crisis. And also another thing is that, I don't like to compare what's happening right now to COVID, because COVID was a black swan. It was a black swan event. It was a different thing.
We didn't see it coming altogether. Yeah.
Exactly. So we're in a different situation right now. I'd like to just look at it as its own, right? We're sitting in this geopolitical trade war. This is what's happening right now. So we don't really have any basis to compare it on. But yes, the VIX is very high. The VIX can go even higher. Gold is going to all-time highs like every week. So yes, people are extremely scared right now, and I do understand that. But also remember how fast people turn bullish as well.
Exactly,
like happens within a day. So yeah, but I can see the warning signs. There is a lot of warning signs, but like I said, I don't think this is a COVID situation. And I think if we're really into a bear market, what we're going to see is not a straight flush down. We're going to see probably some sort of price action that retraces up to levels like, I don't know, even 100,000, like nobody knows. And then if we get a massive rejection from there and we start seeing new lows formed, then that's worrisome. In my opinion, because that would then signal, okay, now we're getting into. But honestly, looking at the S&P 500, these are generational buy moments right now. At the level. So even if we get another 10% drop or 15% drop, it's all going to be okay. And even Bitcoin is still going to be okay, like I showed you earlier on the charts. It's until we really lose the 49K level. And I don't think that we're going to go that deep. But in case that happens, even if we wick that area, we're still in the safe side. So, yeah. That's what I think. I'm sorry. I'm sorry.
No, I mean you're free to think what you want and share what you want. It's fine. That's why we got you on here.
Yeah.
But I can't. I can imagine the smell, as they
The
say
smell's gonna be
online.
bad. It's gonna be bad.
It's gonna be like burning hair. It's gonna be awful. Why don't go ahead and throw up your screen? You can switch over to Trading View, and then let's have you look at HBAR and XRP.
All right, I have it here.
Okay.
HBAR. Okay, so this is interesting. I'm gonna just stick to the concepts that I introduced to your audience today. So they make sense to everyone. So okay, we were talking about the price legs. We were looking at a bullish leg earlier, and in this case, right now with HBAR, we're gonna be looking at a bearish leg. And why is that? Well, very simple, because HBAR broke structure to the downside over here. So now we're not anymore in a bullish leg here. This is a bearish price action. This is a bearish price range that we're trading if this is the low. Now, we don't even know, because once we break down here, like we're seeing some signs that this might be the low over here. So let's just use this as an example right now. So when HBAR starts trading like that, and then I'm looking at the crypto market cap in general and how everything is going, then again, we're playing the same scenarios. We know that from here, if we're really, really bearish, we're going to reject from the 0.5 and then go into discovering new lows, or we're going to go beat the 0.5 and then go to 0.236 and then potentially develop a range. Right? This is going to be the best case scenario, because beating that price action with a new all-time high is going to be very, very difficult. So that's the overall. That's the overall. But using my indicators, by the way, I don't know if you have indicators, but I have developed my own personal indicators, which are over here, that show you liquidity based on patterns and show you support and resistance as well. So here we're seeing that this is a level of resistance. And right now we have broken a level of support. So we're currently just retesting it to see if we're going to beat that level. And then we're going to have to fight from here. We're going to have to fight the 0.5. And then if we go up to 0.236, I think, around 0.45416 for HBAR, it's going to be a good exit area. But again, yeah. So
I see it. No, that's really helpful. No, I'm glad that you're doing this too. So
I am. Yeah.
Can you go ahead and take a look at XRP? Because I know lots of people are keeping an eye on that. And it's in the news a lot again. I thought they were done with the SEC, but they have more stuff coming out. It's like, guys, can we just move on? Can we all just stop talking about XRP so much? I mean,
are we in XRP now or not? No, wait. Where is my XRP? Hold on. XRP here. Alrighty then. Let's go on the weekly real quick. So XRP, using my indicators, is looking good. I like to see that. I actually absolutely love to see that. I love to see my liquidity pattern on a weekly time frame showing the all-time high as liquidity. So XRP, okay, we're gonna hit above $2. That's what I see. With my immediate reaction. And then another thing we're seeing, actually, this is going to be our leg here. This is going to be our leg. So you want to see that kind of stuff to get a little bit more confidence in this price action, because as you see, XRP has dropped down to the 0.236 after developing the high over here. So that's usually not a good signal. But I think from here, 0.5 is holding another retest of this buy zone, by the way. So this whole thing is an order block on a weekly time frame. Right here, this whole thing is a buy zone, right? Our ultimately cheap levels. So then anywhere from here, like, to DCA, I would say, it's probably a good idea. But for me, trading, if I'm trading XRP and if I'm long XRP, I'll be looking to exit at around 1.59 or $1.6 area. because you never know if price is just going to fail from here, or then it's going to decide to continue and take the weekly liquidity, which is at 1.9. But once the liquidity is here, and that my indicators are helping me to identify which altcoins are more likely to go ahead and, instead of range, potentially find a new all-time high. So that's for XRP on like a higher time frame, and then of course entries on a lower time frame, you coordinate that with everything else that's happening in the market, including the traditional markets. But to be honest with you, I'd like to see a bit of a drop. I'd like to see on XRP these relative equal lows down here. I'd like to see them gone. So that's, still has a little bit more to the downside from here of my ideal entry.
So
yeah.
Okay, we got about 5-10-ish minutes left. I think it would be really good to do now is first go ahead and you can tell us a little bit more about where we can find you online. And then I think it would be good if you don't mind, I didn't ask you in advance, but if you could think of or basically share your mini watch list, what are 3 or 4 coins that you're really excited about, you're really interested. You mentioned you had a lot of alerts before that you were that were going off for coins and entries and stuff like that. So first, why don't you tell us where we can find you online, and if you don't mind, you can share some of your alpha with us.
I have it open here. So yeah, basically this is my YouTube channel. It's called Gabbie Trades, at Gabbie Trades. You guys, so yeah, that's it. You can see my not so cool thumbnails, but I'm working on them. That's where you can find me. You can also find me on Twitter up here, Gabbie Trades. Make sure you follow the right account, please, because there is so many scammers out there. I cannot believe what are they doing? These people are crazy. I don't know. I have tons of people asking me if I have a Telegram group. I don't have a Telegram group. You guys, please stay safe. There's no Telegram group. I'm not giving out signals. I have my Discord, which is locked. I think last week, this week is unlocked for new joiners if anyone wants to join. And then after this week is finished, I'm going to lock it up again because a lot of scammers are flooding, and it's just very, very hard to keep my followers safe. So yeah, that's it. You can follow me here. In terms of my watch list, let's have a look what's on my I absolutely watch everything, to be honest. One of my favorites is Chia, to be honest. I've been holding it for a while now, and I think that it's going to see some really, really good developments. But for some reason, my charts are not being very friendly right now. I'm getting data point unavailable.
Oh, you said Chia?
Not sure. Yeah, it's XCH.
Oh, XCH.
Yeah, this is one that I'm holding, and yeah, they have a lot of things planned up, so I'm excited about this one. Of course, it's like a long-term game for me. Yeah, Solana, like I said, I still hold a lot of hope in Solana that is going to perform well, because this is the first time that Solana is kind of it's not even disappointing, but it's just being a bit weak right now.
Yeah.
Just like everything else. A Polkadot is another thing that I'm looking at. Doge, I don't know why my trading view is tripping right now. I'm so sorry.
No, it's okay.
I think it's because we did something to the Zoom or whatever. But yeah, I'm looking at Chia, I'm looking at Polkadot. I'm looking at Doge for meme coins. Sui is one on my watch list always. I think that probably could do well. Filecoin, and all of these crazy. I hold this really weird ones as well, like maps and stuff like that.
Oh wow. I remember maps launching on FTX way back in the day.
I know this FTX coins, I am still eyeing them down because I think they will have a comeback. So yeah.
Okay. So let's close out with that, actually, because you brought up a lot of really good a nice variety of charts. We're talking about like coins that are in the top 10 or top 20, like Solana, talking about Polkadot. Then you're talking about like these low caps, like mid cap, low cap coins, or like the gems. Like, how do you balance your portfolio between like how much do you really look to allocate to a lower, riskier market cap coin compared to a major? Like, do you approach it differently with your investment style, or do you basically just go like ape in to all the low
I
caps,
kind
hoping for
of
like a huge return?
not all the low caps. I kind of like find my own cults that I really believe in, and then I put a lot more than I'm actually supposed to, right? So,
Well, in a bull
but
market, it works
yeah.
really well. Yeah.
Yeah, so that's what I like to do. But of course, I think Bitcoin is the one that, we had a look at all the coins, right? Not all the coins, but mostly, right? We looked at
Mm.
Ethereum, we looked at Bitcoin, and on my show and on your show, we go and look at all kinds of alts. Nothing is as strong as Bitcoin, and that's the reality. So Bitcoin
Yep.
for me, it's always has been number one, and it will continue to be. Everything else is a play for me, to be honest. Yeah.
I think that's a really smart way to look at it
Mhm.
too. And a lot of
Yeah.
people that got into the market in November 2024, December, even January, hearing about all these meme coins. I made some good money trading meme coins. I also lost money trading meme coins. I think the biggest thing that I've learned though, since being in crypto since late 2017, is that there will always be a new narrative. And the trick is knowing when the narrative's getting started and when to jump off the train. And a lot of people get married to a narrative thinking like, oh no, like memes are going to be here forever. It's like, no, like that one was done. Just like NFTs,
Just like
no one really
NFTs,
talks
yeah.
about NFTs anymore. I mean, there's a reason why.
Yeah,
Like that
but
was a
maybe they
fad.
will come back. Maybe they will come back. You never
Maybe,
know.
maybe
Yeah.
they'll actually do something instead of just be a PFP. But I mean, I know that there are some NFTs that are actually like keys or like collector's items and stuff like that. But I think
Yeah.
the bigger thing that a lot of people watching now, especially if you're new to crypto, is that it's normal to see narratives go crazy. In a way, you could almost see the same thing or a similar thing in the stock market where blue chip stocks will go up together, or you'll see like, I don't know, like medical stocks going up
The
together, or
medical
like
stocks, yeah, I was just
innovation
thinking
stocks,
about
or like
that. Yeah.
AI stuff. So there
Hmm.
will always be narratives, there will always be cycles within a cycle. And it's just important to remember that when things are going up and you're feeling like a genius, just consider selling a little bit into the rally, at least
Oh, yeah.
break even on your investments, and you can let the rest ride and enjoy it as long as you want. But so many people are so
That's a
stubborn about
very
taking
safe
profits.
approach. And I love that, actually. I love your approach, and I prefer that, to be honest. And me on some outs, and my friends are stuck right now. So you're finding
Mm,
yourself in a situation where you're thinking, oh my god, should I sell in a loss or should I just hold? So we're just stuck at, okay, we're just gonna hold to find a good exit, but that is not the best strategy, to be honest. It's always good to take a little bit of profit, pay yourself when you can, when the market
mm,
is going up.
mhm.
Always do that.
Yep.
And yeah, use trading to hedge. Like, why not? If you know how to do it. If you don't know, of course, you can learn. But yeah, I think trading is very essential as well to
Yeah,
being able to hedge your positions.
absolutely.
Hmm.
Gabbie, it's been so fun talking to you. Thank
Yes.
you for sharing some alpha, some trading strategies, some charts with us. Again, guys,
Thank
follow
you.
her. Wait, follow on the screen. You're on my
Follow
right, but I have to point.
me.
Yeah. Follow
Oh
Gabbie
yeah.
on X. Subscribe to her on YouTube. Thanks again for joining us. And until the next time, you know what to do. Stay awesome and stay in the green. Peace.
Stay in the green. Peace. Ciao, ciao.